right, today's podcast, Commercial Real Estate School. We're in New York City, as you guys can tell. And that being the case, we're with none other than Bob Knackal, the legend himself. I mean, talk about a guy who kicked off his career at CB Richard Ellis, teamed up with Paul Massey, then created New York City's real estate empire. Bob, thanks for joining us.
Great to be here, Kyle.
Now, tell me if this all sounds familiar. 1984, young Bob jumps into real estate, meets Paul Massey, changes the games forever. Does that sound about right?
Something like that, yeah, absolutely. Right. I met Paul my first day on the job.
Yeah.
And day 2 on the job, we said, hey, a lot of very experienced people around here that, don't look like they're going to spend a lot of time with us. Right. Let's team up, split everything 50-50, see how it goes. And that was the start of a 30-year partnership.
My God. So you're with Paul. You're building Massey and Knackal, closing deals north of $23 billion. Is that accurate? Wow. Between 1988 2014. 2,230 building sales for $20.4 billion and 250 development site transactions worth $7 billion?
Something like that. The number is a little bit higher these days, but
oh my gosh.
They're good numbers. Good numbers.
Amazing. So before we get started into the topics, okay, I understand that you're a big Seinfeld fan.
Absolutely. One of my favorite shows.
I have been working with Mo to try to think of something. Because if you're a big Seinfeld fan, you know every single episode. There's a lot of nuance.
But Kyle, I'll tell you, yeah, it's I think I know the plot lines and some dialogue. Like I had somebody ask me who the sound manager was on one of the episodes. I mean, I don't know the sound manager.
No, I'm not looking to stump you, but season 1, episode 16, long time ago. I don't even know what year that was. I think it was like 19. Had to be in the early 90s, right? Did you know this is a commercial real estate scene in this episode?
I didn't know that.
All right. So it's a scene. We're going to cut it in here right now to take a look at. But George is working in real estate.
Mm-hmm.
And Kramer asks him, hey, are you doing anything with commercial real estate? And George says, I might get into it. My question for you, would George have hacked it on your team back in the day?
I think as much as I love George Costanza, I don't think he quite would have made it. I think he had the job renting apartments, and then later on, he worked for Rick Barr Properties for a couple of days. But I don't know that George would have made it on our team.
I don't think anybody would blame you for that. That being the case, that means Kramer could be your client. What would you have shown him at that time?
Oh my gosh, it would depend. Kramer is kind of an enigma. He doesn't work, but yet he seems like he always gets by and has money. So it would depend what he wanted to buy, what he wanted to invest in.
That's amazing. The qualifying questions for Kramer would probably be pretty interesting. All right, so let's start with number 1. This is going to be our first topic. You talk a lot about how hustle beats talent in real estate. Can you talk a little bit about that and why that's so important?
Sure. Well, I think, Kyle, it's a combination. It has to be a combination. I've always said that when it comes to real estate, number 1, you have to have passion because no matter how good you are, you're always going to hit tough times. And the passion and desire is what allows you to break through those tough times and continue on and get to a point where you're doing well.
Right.
So I think the passion and desire are something that get you through tough times. And I've always said that on a scale of 1 to 10 in terms of real estate aptitude, you can't get by as a 2 or a 3. You have to be a solid 7 or an 8. But you don't have to be a 10. But I think the solid 7 or an 8 who has great people skills, likability, persuasion, understands human behavior, I think that person would be much more successful than someone who's a 10, really, really super duper smart, but doesn't have great people skills. So I think it's a combination of the 3. It's desire, likability, and being able to get along with folks. And then it really comes down to having the discipline to do the things. Look, we're not curing cancer here. Right. Real estate, I always say, investment sales is a very simple business. It's just really hard. And you have to have discipline to do those, what are sometimes very mundane things, over and over and over, every day after day, week after week, month after month. And the folks with discipline are able to do that. You know, Abraham Lincoln said that discipline is choosing between what you want now and what you want most. And I think if people keep their eye on the prize in terms of what their main objectives are, it gives you the ability to plot through the day-to-day routine that might not be so glamorous, but that has to be done.
Yeah, and it's tough in this business because you're not getting paid, right, unless you do something. How did you maintain that discipline in the face of, you know, going out, getting rejections, you know, all the things that happen? It's tough to do, right? Like this being commercial real estate school, I think we get a lot of younger folks who are checking it out, and they want to know, like, hey, I got bills to pay, and I'm getting hung up on every day. No one's returning my emails. Like, what keeps you going? What is
Well,
the
I
secret?
think the best way to deal with rejection is to have an understanding of what the probability of success is. So if we use Manhattan as a microcosm, Manhattan is where I spent my entire career. We do a lot of stuff in the boroughs also, but Manhattan's always been home base. We started in Manhattan. South of 96th Street on the east side, south of 110 on the west side, there's 27,649 buildings. In an average year, going back 39 years, the average turnover rate of that stock has been about 2.6% every year. If you assume half the stuff that goes on the market actually trades, that's 5% of the stock, which means if you're calling 20 owners, 19 of them are not going to have anything for you. So if you realize that, hey, 1 out of 20 is going to be success, it's easy to deal. You get 19 hang-ups in a row. You're like, yeah, man, I'm so close. The next one's a high probability it's going to be a good one. So I think that's the best way to deal with rejection, is to understand what the probability of success is. And then you just have to keep at it. You have to just keep doing things that you need to do. This is a blocking and tackling business. Fundamentals mean everything. You have to just keep at it.
All right, perfect. Going to number 2. So this is number 2. You talk a lot about sports and the relationship between being an entrepreneur, which basically brokers are entrepreneurs, and sports. I've said that too. Like, people, you hear a lot of folks say, it's just so hard. I had a tough day. But, you know, when you're in sports, you know nothing else but I just got to get through this. I can get through this inning. I can get through this at bat. You know, I'm in it now. I have no choice. Talk to me about that.
Yeah, well, I think that one of the things where I see great parallels between real estate and sports is in the sheer competitiveness of the business. This is, especially in New York, this is one of the most competitive businesses there is. And so, you know, we always looked for folks who had some kind of team sports in their background, because you were probably good at working with others. You understood competition, and you were very competitive. And while there was no one single thing that we looked at that people had that was a guarantee of success, things like team sports, achieving excellence in a competitive environment, being captain of the debating team or editor of the school newspaper, or something where you achieved a success in a competitive environment, was something that we thought was a very good lead indicator for potential success in the business.
Do you still think that's true? Like, if you were hiring, would you have applied that same thought process to somebody you're hiring today?
Yeah, absolutely.
Yeah. Anything else you would be looking for? I mean, given
well,
the
again, the passion for the business, and someone who really wants it. You know, we always try to differentiate, and it can be a very different thing. The desire to get the job versus the desire to do well in the job. And they're often not related. Everybody who comes in for an interview really wants the job. Not everybody, most people. But the desire to do well in the business, you know, asking folks, hey, who do you want to be a hero to and why? And then you see what really makes them tick. And there are a number of things that create a burning desire in someone to succeed. Maybe it's to right a slight that happened to them in the past, or someone not recognizing their value, or wanting to show what's inside somebody. There are a number of drivers that make people have this burning desire to succeed in them. But if you have that, if you have passion for the business, burning desire to succeed, have some demonstrative discipline within your background, that's a great setup. That person probably is going to do well in the business.
Yeah, I agree with you, and I think that it's competitiveness, I think it's the effort that goes in, like going to the batting cage right after the game. Like Don Mattingly was famous for that, right? They shut the lights off at Yankee Stadium. He'd still be hitting off the tee. At least that's what my dad told me. I don't know. He was trying to get me to do it, but that extra work, I think, is what matters. If you're somebody who has been in this business for a while, rather, and you start to feel like I'm losing that competitive edge, what are some hacks that you might have for somebody like that?
No, look, I think I've never had that experience, so I don't know quite what that would be like. But I'll tell you that there is always something to push you to want to do better, achieve more. One of the things I love about the brokerage business is that you have many opportunities to win. And I'm addicted to winning. I love winning, right? Winning when you find out somebody wants to sell their building. Winning when you give the pitch and get awarded the business. Winning when you sign the contract. Winning when you close the deal. All these wins are you get addicted to this. And so you want to go out and keep doing it. And I think now it's an extraordinarily interesting time because of what technology is doing to the industry. When I started, and I was sitting at my desk at CB in 1984, I had no computer on my desk, no fax machine, no cell phone, right? And look at what's happened over the past 39 years. And I think now, over the next 4 or 5 years, AI is going to as tangibly change the business as the last 39 years have from a technology perspective. And so I feel like I'm kind of starting my business over from scratch.
Right.
I happen to have a 40-year track record behind me.
Yeah, that helps.
Which is going to be good. But the fact is, I'm starting over, and I have to adapt these technologies. You want to always stick to your core values and principles, but you have to constantly adapt to a changing environment.
What do you think commercial real estate in general has been slow to adopt technology? What do you think what's behind that? I mean, there's so many advantages. Like you're saying it's going to potentially change the industry. Why not educate yourselves? Do you think that's happening more now? Because it seems like it wasn't for a while.
Yeah, it's been, everybody always says that real estate's an analog business in a digital world. And I think that's the case. But I think the early adopters of current technologies will be the winners in this. So as much as, I'm the least technologically savvy person there is. I'm happy my cell phone goes on in the morning. But I'm adapting and adopting AI applications for some of the data sets that I have. And, I'm really trying to get into it because I think the folks who are picking that up early and utilizing it early are going to be the winners in this.
There's also been a lot of folks saying that we have a hiring problem, right? Kids graduating from college, tough to sell this job right now, right? Do you think the technology applications that we're seeing now will help bring more people into the business?
I don't know. One thing I love about real estate brokerage, it is the ultimate meritocracy. And if you're the kind of person that says, hey, you know what, I know how hard I work, I know how hard I studied, I know how hard I practiced, and how hard I played on my team, and the effort I put into my friendships. And if you know you're that type of person that really puts everything in, goes all in the different facets of your life, it's a perfect job.
Yeah.
So I think that the fact that there is generally no base salary or oftentimes no draw can be overwhelming for folks. But when you're just out of college, more likely you're going to live at home than not. Maybe get some help from your folks. But, I think it's such a great industry. And I see a lot of kids that are getting into real estate much earlier today than they used to. And, when I was at the Wharton School, I knew pretty much after my first summer between freshman and sophomore year, I wanted to get into real estate. So I took every real estate related class that Wharton offered. There was 6. There's probably 45 today.
Right.
So there's a whole the whole aspect of how real estate fits into the whole mosaic of business has changed very, very significantly. In the 80s, it was a cowboys, gunslingers business. Today, it's very institutionalized in a lot of ways. So I think that as a young person, it's probably a more appealing industry today than it was 40 years ago.
Cool. That was great. All right. So the next one is just 3. We call this one Own Your Zone. We had obviously told you to listen to a couple podcasts, read some stuff, and there was a territory system that you guys had implemented. And here in New York City, I think, it's from somebody outside might say, oh, it's not that big. But tell me how important that was in the beginning of your career.
Oh, Kyle, it was everything. There are 176,000 investment properties in New York.
Wow.
That's a big market, right? So we always felt that to provide maximum value to the client, you had to specialize. And you specialized, you became an expert in something. That specialization allowed you to differentiate yourself, and that differentiation created a competitive advantage.
Mm-hmm.
Now, becoming a market expert is so important because you have to provide real value to your clients. So, back in the 80s when we started, we had this geographic territory system because the amount and quality of publicly available information was pretty terrible. So we hunkered down into small neighborhoods, had each broker work in each one, calling every owner, knowing every buyer, every seller, what zoning changes were affecting value, what new developments were going on. And that provided a competitive edge when we were going into pitch business. Even, I tell the story about we had just sold 3 buildings, and there was a building that we were pitching, and the owner even said to us, hey, we're interviewing other firms. The guys have a lot more experience. Why should we hire you? I said, yeah, we've sold 3 buildings. We'll admit it. But one was down the block, one was across the street, one was right next door to yours. We know more about this neighborhood than anyone, and we can be a better advocate for you in terms of convincing buyers why they should pay more. That approach got a lot of traction. We grew the system like a jigsaw puzzle, filled Manhattan, went to Queens, went to Brooklyn, went to the Bronx, northern Manhattan. And it was a great system. I think today, based on the vast amount of publicly available information that's out there, a product specialization is probably more important than geographic specialization. But you have to be an expert. There are thousands of people doing what you and I do, Kyle. Thousands. How are you going to be different than everybody else? Why should somebody hire you? What's your value proposition?
Right.
And how do you articulate that? Why does somebody go to you? I use as an example. Let's say you're out playing basketball, which probably at our ages you shouldn't be out playing basketball, but you tear your meniscus.
Yeah, right.
You go to one doctor. He says, "Oh yeah, I've done knee meniscuses. I've done ankles, shoulders, hips, elbows. I can do it all." And then you go to one guy who says, "Yeah, I've done 10,234 knee meniscuses. That's all I do." Who are you going to?
Right, exactly. Yeah. It reminds me of Kramer and the going to the vet for his treatment because they've more experience around that versus. But somebody told me in the restaurant business, that, and it applies here I think too. Be Mariano Rivera. Don't be the guy going out there throwing 7 different pitches. Go out there and throw what you can do and nobody else can touch. I think that's a good analogy. But tell me about when you went to the Boroughs, because I was listening to that actually on the podcast on the way in, and how important that was at that time.
Yeah, that was a big inflection point in the history of the company. We had all the territories in Manhattan filled, so okay, we want to keep growing. How do we grow? Do we get into other service lines? Do we lease office space? Do mortgage brokerage? Lease stores? Or do we go out to the boroughs and sell more buildings? And we said at the time, look, we don't know anything about those other service lines. We think we know how to sell buildings. Let's go open up in Queens. And when we did that in 1999, most Manhattan brokers felt like, if you went across the river, your shoes would get filthy, right? So they didn't want to go to the outer boroughs. But we opened up Queens in 99, opened up Brooklyn in 2000. And when the market came roaring back after the recession in the early 2000s, we were already very, very well entrenched in the outer boroughs. And when the market started to take off in 03, 04, we had dozens of brokers out there, and we were just selling everything in sight.
Oh, that's amazing. All right, cool. Number 4. So the economy, a lot of questions about the economy, interest rates, all that stuff. So deal flow is down. What are some things you can do to sort of keep your head above water, maybe even gain a little bit right now?
Well, I think during any downturn where things are a little slower, it's a great time to kind of take a step back. And I'm always an advocate of working on your business as well as working in your business. But working on your business is all right, where do I want to be in 3 years? Where do I want to be in 5 years? Where do I want to be in 10 years? What are the things I have to do to get where I want to get to at that point in time? And so maybe you work on some marketing materials or a new initiative for research of some kind, or you create something that puts you in a position to take advantage of the market when it does come back. Because one thing I tell everybody, the market has been, is, and always will be cyclical. It definitely is going to come back. So put yourself in the best possible position to take advantage of the comeback when it does come back, because it absolutely will. It's just a question of when.
Yeah.
So I think you have to make deals to pay the bills. So you work hard to make those deals, but you also maybe take a little bit more time to step back and work on your business and figure out where you want to be in the future.
Those things like marketing or diving into whatever's happening, the numbers, the vacancies. I know you're big on stats. Is there one thing that you're looking at right now that would be a potential indicator of when things are either going down or staying flat?
Yeah, sure. I can tell you. We got our third quarter synopsis done, and interestingly, if we look at Manhattan for deals over $10 million, first quarter there were 42 of them. Second quarter 43, third quarter 84, more than doubled. This could be a sign that the natural capitulation is starting to happen and sellers are coming down. When the market turns, something exerts downward pressure on value. In this case, it was interest rates. And you have a situation where volume is going to slow. Volume slows because sellers who have their properties on the market aren't getting the price that they want, so they don't sell. And so volume slows down. But at some point, and usually it's about 12 to 18 months, sellers realize, hey, this is the market. Right. And yeah, shame on me. I should have sold 4 years ago or 5 years ago. And every seller today is telling me, oh, I had higher offers in the past. Right. And I said, well, everybody says that. I wish, if I had a time machine, I'll let you know. But I don't have a time machine.
That's value.
And so today is the market. And unless you think the market is going to improve dramatically in the short term and you have pent-up demand to sell, you're going to come down to meet the market. So I always say 1 quarter is not indicative of a trend. We want to see 2 or 3 quarters. So we'll probably know by the end of the first quarter in 24 whether this capitulation phase has started or not. But I think it's an interesting sign that we had so many buildings trade in the third quarter of 23.
That is interesting. And I think it also, I know you've mentioned this before and said a lot in our business, relationships are everything. This is not the time to go dark on your clients, right? If they're not selling or they're not buying, that doesn't mean they get cast to the side. How should you handle that dynamic?
Well, Kyle, that's all about market presence. And I work with Rod Santamassimo at the Massimo Group. He's been my coach for over 12 years. And we always talk about market presence because, like in a city like New York, there are about 250,000 people that own investment real estate. So that 176,000 properties, is owned by 250,000 people. You can't possibly know all those people. So I always say it's not who you know, it's who knows you. Market presence is a big part of that. So you have to make your calls, you have to send out emails, send out texts, send out hard mail, a vastly underrated method of market presence, hard mail. But you have to go speak in public. You have to go to networking events. You have to be out there. And the more you're out there, the more information you're going to get in the way of. And the more information you get in the way of, the better job you're going to be able to do for your client. And at the end of the day, that's what really matters. How are you going to do the best job possible for your client? By having market presence and getting in the way of all that information, you're giving yourself more ammunition to get a better result for your client.
And I think you do a phenomenal job on social media, right? I mean, because now that's a big thing too. Because with people spending so much time on their phone.
I forgot to mention social media. See, I've only been doing it since January, so I forgot that's one of the market presence things.
But yeah, I mean, it's a way to amplify, right? I mean, you could never reach that many people. I'm with you too. I think the hard mail thing, Beth Azor, who I know is a mutual friend of ours, she big on the thank you notes, following up with that type of stuff is very impactful when you're used to just opening something on your phone. What impact has social media had on your career in the last however many years you've been really going at it?
Well, really, just since January. So
This year.
it's been
Wow.
only 10 months, but it's been really eye opening. I really thought it was a bunch of hooey,
Mm-hmm.
and people were after me, "Hey, Bob, you really should try it, try it,
Yeah.
try it." I said, "I'll give it 3 months, see how it goes." Been really surprised at the reach that it has, the relationships that I'm building with people. I wouldn't have had those relationships without social media, and it's been really eye opening. So I think, again, you can't rely just on social media. It's
Mm.
one of all those things where you have market presence. And I think, like with everything, you have to find the right rhythm for you with regard to this. Because you could be on social media all day long, every day,
Right.
but then you never get any deals done.
Right. Right. Yeah.
So it's finding the right cadence, the right amount of time to spend. I post every day, but I have Mo Regalado, who, she's the best.
Yeah.
She
Yeah.
helps me with all my social media
Shout
in
out to
terms of
Mo.
posting. I
Yeah.
write all my own content, but Mo does all the behind the scenes stuff and
Yeah.
the posting, and I couldn't possibly do it without her. So yeah, it's been a great thing. I plan to continue to do it for the foreseeable future.
That's amazing. I went to look up some podcasts, and there were several. So I love to see that because you have so much information, so much knowledge. I've learned so much in the business, and I think we all know you could be shouting from the rooftops every day. 99% of people won't do it, but you impact a couple people in this business. That's really all. What I'm sure that's going to be part of your legacy is telling your story to these people who are maybe struggling, particularly if they've just gotten the business and the economy's. Who knows what's going to happen with the
Yeah, Kyle.
economy?
Look, I've always wanted to help folks.
Yeah.
That's part of what we had at MK was very much a servant leadership type of mentality where we wanted to see all of our folks do better than us.
Yeah.
And so we were very encouraging, supportive, focused on training, building their self-esteem and confidence. And so that's why today one of the things I'm most proud of about the whole Massey Knackal journey was that today there are 29 companies or divisions of companies that are owned by or run by people who learn the business at Massey Knackal
Oh wow.
in the New York City investment sales world. And so in the same way, through social media, meeting a lot of young folks, reaching out for advice and things like that. And clearly I don't have time to talk to everybody, but every once in a while something strikes me about someone. I spend a little bit of time with them, and it's very rewarding to see them succeed.
I appreciate you spending the time with us today. I know from the CREI Summit, everybody. I've been to Tahoe. I've been to New Orleans. I just couldn't make it this year because of the birth of my son. But everybody was talking about your talk and how you wanted to connect with everybody and share that. You feel so inaccessible, right? People, especially from other markets. So I think that leads into episode number 5 here, which is I heard you again talking on another podcast about sort of the culture that you had and like finding these people. And if you didn't want to hang out with them, don't bring them into the office. And they'd be at weddings. You guys were renting Hamptons houses together. Talk about how you build that culture because that's not easy to do.
Yeah, no. Well, if you think about it, if we always used to joke around at Massey Knackal that to be successful in investment sales brokerage, you only had to work half a day. It didn't matter whether it was the first 12 hours of the day or the second 12 hours of the day. But
Right.
if you're going to work at least 12 hours a day, you want to be working with people that you like. So it was very, very important to us to build an environment with really good people. And so we told our HR folks, look, you interview somebody, they might check all the boxes in terms of great school, great grades, team sports, all the boxes that you'd want to check for somebody. But if you sat with them for a half hour interviewing them and immediately afterwards you didn't feel like, hey, I'd love to go have lunch with this person and keep talking more, or I'll go have a beer with them after work,
Right.
you cannot offer them a job. And that process is what created the culture that we had.
There's a saying in the restaurant business. I can teach you the technical stuff, how to run the POS, how to run food from the kitchen to the tables, but I can't teach you personality. I can't teach you the soft skills. Was that something you guys were looking at then? Is that really how you would define it, with the soft skills? I mean,
Yeah, we had our training manual was about 250 pages, and we went through everything. We used to have guest speakers come in because there's so much. I think so much of college curriculum is such a waste.
Mm-hmm.
I mean, do you really care whether prepaid rent is a debit or a credit on a balance sheet? I mean, who cares,
Yeah,
right.
right.
Unless you're an accountant, it doesn't matter. But having skills like likability, understanding persuasion, understanding human behavior, psychology, these are things that for anybody, whether you're a real estate broker or an attorney, a banker, you're in the movies, whatever it is, you have to get along with folks,
Yeah.
right? And so I think there should be a whole curriculum on how to deal with people. And we used to have guest speakers in all the time. We had one of my Wharton professors, Richard Schell, come in and talk about the couple of the books that he wrote, one being The Art of Woo, how to woo somebody. We had Harvey McKay come in and speak to us. Bob Cialdini, who's the head of the psych department at the University of Arizona, who's probably the leading authority on persuasion in the country. So we were always investing in our people in terms of technical training relative to the blocking and tackling of the real estate business. But then more than that, it was the soft skills of how do you deal with people? How do you get along with people? How do you create friendships? How do you look for commonality that can be the basis of a true bond? Like I believe any two people could sit down, and if they asked each other probing questions for 20 minutes, they're going to find something they have in common.
Right.
They both like NASCAR. They like the New York Giants. They like knitting. Whatever the heck it is.
Right.
And find that thing that's commonality, and you can't bullshit that. You
No.
can't say, "Oh, you like knitting? I love knitting," because
Yeah.
you're going to find out right away
Real
that I'm
quick.
bullshitting
And
you,
what kind
right?
of needles do you use? Yeah.
So sharp ones. If you can find something that you really connect on, that's the basis of a great relationship. Like, use Arnold Gumowitz as an example, longtime owner in the city, huge Nick and Ranger fan. The first 2 or 3 minutes of every conversation, we talk about the Rangers and the Knicks, and Russ Appel from Pradium. He loves to drink wine. I love to drink wine, so we've gone to wine tastings together. But if you can find that commonality thing, that is something that can be the basis of a really strong and lasting friendship. And that's a skill to be taught. And the way you get there is by asking probing questions. Asking somebody, hey, where'd you grow up? Where do you live now? How big is your family? Stuff like that. You're going to get in the way of information that's going to allow you to find that thing that could potentially connect you.
Yeah, and I hear so many brokers now talking about, I just need bodies. Need bodies in the office. And it seems like that is creating more problems than anything. So like with the social media stuff, I've had conversations with Allison Weiss. I don't know if you know her. She's been on this show early on. She's phenomenal when it comes to recruiting, and she just knows people. And she says, your vibe attracts your tribe, right? So the way you put it out there on social media, in person, when you're dealing with somebody, do you remember, if you can speak to it, a time when you had to remove somebody because they weren't, maybe like, I thought I read this guy right or this gal right, and it just wound up not being.
Oh, yeah, all the time. There's no formula that is foolproof. And you don't really know about somebody until they're in the job for a few months. But we actually, back in the mid-'90s, we hired the valedictorian from Harvard. And he was in the business for 8 months and totally flamed out. He couldn't sell anything. And you know what? We thought, we're getting this unbelievable, great quality guy. And he was nice guy, but he just couldn't sell.
Good on paper.
So, yeah. So I think you don't know. You have to see how people are when they're in the trenches. You use everything you can use to analyze somebody. We even did personality tests for a while.
Yeah.
But you use all the information you can to try to increase the probability of success, but you never really know until somebody gets in the seat and starts calling and doing the business.
I think it's kind of like in locker rooms in sports. You hear that all the time. He's great on the field, but he's just not a very good locker room guy. And before you know it, they're traded. They're out of there. I think that's another parallel to like office stuff.
Yeah, without a doubt. And I think, you say companies looking, I need more bodies. It's not about more bodies. It's the right bodies. If you're hiring the right people, hire 200 people. If you're hiring the wrong people, don't hire anybody. It's very, very important because even one person can be very disruptive within an organization.
Oh, yeah. Cool. Let me get my next one up. We're halfway done here. Are we good on time? Got a couple more minutes. Okay. Let's talk about family. I think You talked about mentors. I'm sure you've mentored a lot of people. Can you speak to anybody in your family who really kind of keeps you going, who kind of keeps you moving along?
No, well, my biggest motivator in my life is my wife and daughter.
Yeah.
Been married for 17 years. I have a 14-year-old girl, and everything I do for them. And so, in terms of mentoring, no, but certainly driving me, keeping me focused. I asked the question we asked people who we interviewed, who do you want to be a hero to? I want to be a hero to them.
Yeah.
So that's what drives me. In terms of mentors in the business, I have to say, I always bring up Steve Siegel, who's the global chairman of brokerage at CBRE. Steve is a great friend, a client, and I just admire so much about what he's done, the way he carries himself, the way he treats people, how philanthropic he is. Just a super role model for me.
And your parents weren't in real estate, right? They were,
No.
as you were educators. Yeah, mine too. Do your parents, you feel like, played a role in who you are today and help you become?
Oh, I'm sure that it all goes into it, because our blueprint is formed when we're young. So probably everything that goes on in that family dynamic when you're young makes you who you are, and creates the drivers in you. It makes your personality the way it is, make you want the things you want. But I grew up in a very small town, Maywood, New Jersey.
Okay.
And we didn't even have our own high school. I went to Hackensack High School next door. But no, it was a great childhood, and grew up very modestly. So did Paul. So when we started the company, we started it with the idea that, hey, maybe we'll build something we could sell someday, and it worked out.
That's amazing. All right, let's talk about restaurants. New York City restaurants. You touched on the wine. We haven't talked about food yet. We lost some good restaurants during these last couple of years. What are your go-to New York City restaurants? Are they still here? Let's just talk restaurants for a second.
Yeah, well, I have a bunch of places in the neighborhood that I love. Come Prima on Madison between 72 and 73. Absolutely fantastic. I love that place. Bar Italia also on Madison for French, and I love French. My favorite restaurant back in the 80s and 90s used to be La Reserve on 49th Street. No longer, hasn't been around for a while. Today I love Marjarell on 63rd Street. Absolutely fantastic restaurant. Always a great meal. And recently, my wife and I have been really enjoying the Centurion Club at 1 Vanderbilt. Unbelievable. 55th floor.
Yeah,
unbelievable views of the city.
I gotta check that out.
They have one bar on the east side of the building that has an unobstructed view of the top of the Chrysler building.
Very cool.
Really fantastic. So a ton of great places in the city, though.
So you said you're a wine guy too. Are you Old World, New World, California? What's your?
I find, Kyle, it changes every 8 to 10 years. I went through periods in my life where I only drank white, then I only drank red, then I was mixing it up. Right now, for a while, my favorite varietal's been California Cab, but I've gone through periods where I only drank French wine. So it really depends.
Are you a collector or just you collect your own wines, or you're just?
I collect so I have enough to drink. Put it that way.
Getting low. Need to go get some more.
That's
I know that vibe. All right, last question. The future. What does the future look like for commercial real estate?
Look, I think that the future of the business is going to be changed, and changed by technology. I think that the business may convert from more of a brokerage type business to more of a consulting type business, because I think there's two main functionalities that investment sales brokers have. One is the finding of the buyer, and two is negotiating the deal. And I've always said, because buildings are not widgets, you're always going to need a human being to interact and negotiate the transaction. I'm not so sure that you're always going to need a human to find the buyer for you. If everybody knew, every seller knew that 99% of the buyers go to xyz.com, they're going to put their property on xyz.com, come to me and say, hey, Bob, these are my top 3 bids, finish it up, negotiate it for me.
Yeah, right.
It's a consulting fee, not a brokerage fee. So I think that is potentially an outcome that AI will have on the marketplace. But everybody thought technology was going to change the world in 2000 and 2001. There were 33 companies started back then that were supposed to disrupt the market, displace brokers, replace brokers, and they all went belly up. So, we'll see what happens. But I think the technology is just too powerful to not have a very profound impact on what we do.
Yeah, I agree. Do you think any of this NAR commission stuff is going to trickle down to the commercial real estate industry?
I got to tell you, I think that it's interesting the way it's been portrayed. I think that to have buyer brokers have to get paid by the buyer is going to create less transparency within the business. And for that seller who was upset that they had to pay their broker and the buyer's broker, they're going to have less people looking at their property, so they're probably going to get a lower price. So ultimately, I think it's not in the seller's best interest. This is the way the business has been run for a long time. It should continue to run that way. And I think that at the end of the day, who will be hurt if what was just passed, or that court decision, if that becomes the way the business operates, it will lead to lower pricing for sellers.
There you go. We're done. Thank you so much.
Great.
Appreciate the time. That was great.